Good morning. This is Larry McMillan with a stock market update on Tuesday, September 3rd. So the market's off to a rough start this week. That's somewhat typical right after Labor Day to see the market sell off. Not every year, so we don't really have a trading system based on that, but it's happened often enough that I wouldn't think it's that unusual. The S&P chart is positive in that last Friday, S&P closed at its highest level since the all-time high back on July 16th. So it's backing away from that today, once again showing that there's some resistance at or just below the all-time highs. There are a couple of support levels below here. Last week's low is one, then another perhaps more important one right around 54.50. And then 53.70. If we broke down below 53.70, that would be pretty negative. I don't expect that's going to happen, but you can never tell. It's the market. The McMillan volatility band buy signal is still in place. The equity-only put call ratios are also bullish for the stock market in that they are declining. Breadth has been pretty good, not tremendous, but it was tremendous before, and it's still hanging on to those buy signals that were generated back a little while ago. We did also see the cumulative volume breadth, which is measures volume, not just issues, made a new all-time high on Friday. So usually that's an indication that SPX will follow along with a new all-time high of its own. New highs versus new lows, that's been a very bullish indicator. So that whole set of indicators there is quite bullish. Some of the volatility indicators, though, are not so much bullish. Realized volatility still remains rather elevated, and that's because the market goes up quickly and back down quickly and back and forth. That keeps realized volatility high. That's generally not a good pattern for the market, though, to see realized volatility high. So that's sort of a nagging negative indicator. VIX has not been able to close below its 200-day moving average, so that's also a bit of a negative indicator there. The previous VIX spike peak buy signal is still in effect through the rest of this week. And then we're talking about, the construct of volatility derivatives, in other words, the term structure of the VIX futures. That is slightly elevated in that there's some nervousness about what the market's going to do right after the election. And we mentioned this before. I call it the election bump and implied volatility. We aren't truly trading anything on that yet, but it's definitely there. The market expects volatility after the election. That's unusual. Usually we have elections, the market's kind of doing its own thing and doesn't really care that much, but it looks like this year is going to. So all in all, most of the indicators are bullish, but we see that there's still some danger in this market days like today. And so we're just trading confirmed signals as they occur, sticking with the system parameters that surround those. And we're taking partial profits as trades become deeply in the money. So I invite you to visit our website, take a look at our daily letters, if you want to keep up to date on these developments in a more timely manner. And meanwhile, have a great week trading.